Yeah, I was getting ready to work on the course a little bit more, but I I decided I want to jump on and talk a little bit. It's only a couple of us in here, so hey, all I need is one. Let me go ahead and share my screen. And what I want to talk about is something that's let's see, which screen do I need to share? I need to share this screen. Um, I'm so used to y'all. Okay, do y'all see my screen where the Discord? I'm moving the Discord back and forth right now. Is that the screen that y'all see? All right. Okay. All right. So, what I want to talk about today is the how there are nuances and gems inside gems of the teachings of Michael J. Huddleston. And there are small little details where if you are privy to them, then you can execute with ridiculous amounts of precision. Okay. Ridiculous amounts of precision. And I was in here trading today, and I ain't gonna hold y'all. I pissed myself off, right? I was trading and I was on Tremaine's live stream while I was trading, and I looked up and the P&L was only counting in one account. And I thought I had my trade copy on set to trade in three accounts. And the P&L was only counting in one account. And when I looked at the trade copy, I did have it on, but I forgot to select the instrument, so it didn't copy to the other accounts that it was supposed to be copying to. I'm like, oh my God. So needless to say that I so I had to wait some more and look for another opportunity for those other two accounts, and I was able to do that. I was able to do that with the other accounts. The other two that I left out. I just did it in the other two that I left out the other time. No, because there's no guaranteed trades. So why am I going to risk? Why am I going to risk the money that I already made? If go over there and sit in the corner with Slater. Just go sit in the corner with Slater right now. That's what I want you to do. That's what I want you to do. It look like my mic peaking. Is my mic peaking? Was my mic really loud? When I looked over there, it looked like it was peaking. So this guy right here, I'm like, hey man, why you put those on, man? You could have doubled up on that account, man. You could have been. Oh my God! Don't never start trading. Just come to class. Just come to class. Golly, nothing. The man listens to nothing I say. Oh my God. Okay, so let's go back on. Let's get back on track. All right. So, when you're watching price, right? We all know, right? We all know about. If you look here, right? If y'all see my chart here, this is primarily, you know what I'm saying, how stuff look when I'm trading. If y'all, I don't know if y'all can see here, but there's a faint line there, and that says 7 a.m. Right? That's a faint line there that says 7 a.m. That right there, of course, we know this is the 9:30 open. Right? So we know that this is the lowest low and this is the highest high after 7 before 9:30. Okay? We all know that. 9:30 opens, pow, we take off, take out the high, right? We're in a premium, right? We're in extreme premium. Okay? We take off, take out the high, right? And wick down. Right? Once we wick down, okay, we drop down, got our breaking market structure right there. Right? Trade back up, right? Drop down, trade back up, drop down, take out the low, trade back up, drop down, take out the low, and now we're trading back up again. Now, is there anybody in here? Well, somebody in here. Well, first of all, let me go to a 5-minute chart because I got a 5-minute PD array in there, right? So, right, looking at the 5-minute chart. Well, no, let me do this right here. I'm going to bring the 5-minute over here. And put the 1 minute back over here. All right. So now, just need to look at a 5-minute for right now. All right. So now, looking at the charts, right? Looking at the charts, I want to see if y'all can spy with your little eye what I got going on the charts with the PD arrays that I marked. We got a 5-minute PD array here, right? Here we got here, right? 5-minute PD array there, right? And then we got, come here. We got 1 minute PD array here, 1 minute PD array there, right? What do y'all notice about these PD arrays? What looking at the price action? Right. Looking at the price action, right? What is significant about those PD arrays, right? Entry, not just inverted, but just looking at them here, right? When I come from here to there, when I come from here to there, and then on the 5-minute, when I come from here to there, what do you notice about all of these? What do they have in common? All three of them. Say again. Are they in the first quadrant? Take off the N and take off the quadrant. Take off the N and take off the quadrant. They are the first. They're the first fair value gap in a run that took out liquidity. Right? Boy, stop. Get off my live, please. So it's the first. So what does that mean? So the first fair value gap in a price run when you're taking out liquidity, right? If you're anticipating this run to be manipulation, right? If you're we're anticipating it to draw into the sell side, right? I'm anticipating it. I'm anticipating to go lower. Why? Because we're treetop tall in a premium, and prices, you know what I'm saying, just kind of meandering. So I'm looking for a reason to get short, right? I'm looking for signatures that says I want to go short. All right. I want to be able to short off of. All right. So when price, right, we come in after 7 o'clock or anytime really, but we just using after 7 o'clock, right? So price after 7 o'clock, we come in, right? We make a high, we make a low, right? We trade down, we make a low, right? And then we displace away and we make a high, right? So this is the highest high, this is the lowest low, right? We trade back down into the discount, right? Trade back down into the discount. We trade, if we notice right here, right? Notice it did it right here, right? You see that fair value gap right there. When we took off and took out that low, that's the first fair value gap going down. Once we inverted that, when we came back to this breaker, where the price come back to that fair value gap. See, that first fair value gap when price took off the takeout price, right? So it came back down to that inversion fair value gap. Remember how Michael teaches, when you got a breaker and there's an inversion fair value gap in that leg, you're anticipating price to go to that inversion fair value gap, right? How do you know which one, right? You're looking for that first fair value gap in front of a displacement that took out liquidity, but it has to be in accordance to the narrative, right? What's the narrative? It's giving you a fake move and then showing you the real weight, and it's coming back to where it needs to come to. All right. And I use that as an example, but if you look over here, when I was actually trading, right? So when we came over here, right, we displaced away and we came down, and when we created the inversion fair value gap here, right, when we created that inversion fair value gap there, now I'm anticipating this to be used as an inversion fair value gap, right? But I don't know when it's going to do it, and I don't want to wait forever for it to come back to it, right? How it came back here. Got a nice little sell off of it, right? But since we've came down here and done all this down there, I don't want to wait till it come back all the way up there. It could still hold and push it back down, but I'm not waiting for all of that. I want to get in and, you know what I'm saying, get my money, right? So as we create this inversion fair value gap right here, right? Now, this right here, we already ran up and did the damage on the upside, right? So now I'm looking for this fair value gap to hold. Okay, I'm looking for that fair value gap to hold, but what am I using as a judge of, right? If price want to get sloppy, we're in this opening range. What can I use as a judge to get short off of? Well, now that we've got a change in the state of delivery, meaning, right, we've traded below this order block, we've got a break in market structure, we got an inversion fair value gap. We know all of this is being types of change in state of delivery. We got a change in state of delivery, we got an inversion fair value gap, type of change in state of delivery, break in market structure, type of change in state of delivery. Now that we got the change in state of delivery, market structure shift, whatever you want to call it, you want to focus on the SIBIs. You're short, you're looking for a SIBI to short, right? And once we create this inversion fair value gap right there, where's the SIBI? Right there, right? So once we create this fair value gap there, right, and start trading back up into it, there's nothing wrong with getting short at that, but I'm focusing on the bearish fair value gaps now because we got a change in the state of delivery. So now I want to short at bearish fair value gaps. Okay, there's my bearish fair value gap right there. Get short there, right? Then You say, Tim, what about this other stuff that you're marking out there? You got a 5 minute, right? You got a 5 minute. You got a 1 minute down here, little tiny 1 minute right there, right? So when I shorted here, right, trade it down to whatever I wanted there, right? And that's when I noticed, oh man, I'm only short in the one thing, right? So now what am I looking at? Okay, I need another opportunity, right? So now when I'm going in looking for another opportunity, I go to the 5 minute, right? And I'm like, okay, this is my first fair value gap on the 5 minute, right? Before breaking structure, all right, in the fake move. Now we've come down and traded below that. And so I want to use it as an inversion fair value gap. But somebody not muted. Lump, mute for me. Right. And so we had already traded up into it right there. I'm like, God dog, we already traded into it. So what can I do? Right. Well, what you want to do, right? Once you get your change in state delivery, right? Any imbalances on the bullish side or bearish side, any imbalances on the opposite side of the sell curve, right? You want to anticipate price getting past them and then trading back up into them to be used to push price down. And that's why I have this 5 minute there, right? Because that's the first one, right? That, God dog it. That's the first one that was created. That's the one I want to be at inversion, right? We had already traded up into it here, right? So now since we already traded up into it there, right, it's here. That was when we came up here, right? We've already traded into it. So now, right, what we at right here? Yes, that's it there. Let me see here. Find it right there. Right. So right there, see how we went up there? That's that same candle there, right? So if you notice here, this little fair value gap right there, right? That's where I got short the next time in the other accounts to come back and take out the opposite end of the range, right? Because we've engaged the buy side, got a break in market structure, right? Then we came down here below this low, right? We traded back up, right, into the inversion fair value gap, right? Traded back up into the inversion fair value gap, but I missed it when it traded up there. So what's the alternate entry, right? What are we looking for? We're looking for imbalances in this price leg over here to be used as resistance, because we've traded through them. Just like, you know how Michael teaches about reclaimed order blocks, right? You got an order block, you got a bearish order block on the sell side of the curve, and once we trade past it, you're looking to reclaim that order block over there. Same idea, same concept, right? Now that we're on this side of the curve, you're looking for the inversion fair value gaps over here to be traded back to and go down. And if we was bullish, you'll be looking for them to come back down to it, right? You'll be looking for like civvies, you know what I'm saying? Just say if it was a civvy right here and we was above it, you'll be looking for it to come back down to the civvy over there, right? So that's the little extra piece of gem that I wanted to sprinkle onto the whole thing about the fair value gaps, because I'm constantly studying, constantly back testing, constantly like going back through old material and seeing little nuances that I may have missed in seeing like why is this trade reaching to this? What did I miss here? And I'll go back and I look at my notes, and then when I see a note that's dealing closely to this stuff that I'm seeing in price, I'll be like, let me go back and look at this video and see what I missed. Right? I do that constantly. And so those little things like that, it will give you the opportunity to have like scary accuracy as far as like the entries, right? Like that civvy right there, right? When we wick done there, what do y'all notice about that civvy right there, right? When we look here, if I come here and go there, now I'm looking at this civvy here because I want this to be a breakaway gap. When I said once we made the inversion fair value gap, and I'm trying to get short off of a civvy, I want this to stay as a breakaway gap. But once we wicked up there, right, before coming down and closing below this right here, price went right back up, did an institutional order flow entry drill on that first civvy right there, and then came down and made the inversion. And once it did that, when it traded back up into that civvy right there, that's when I was shorting. But if you notice, before price did it, it went up there and got an institutional order flow entry drill off that first civvy right there. All right. This stuff ain't by mistake. It's by design. And if you understand order flow and price delivery, right, it ain't much you can't do. It ain't much you can't do. And then even with this right here, price came back to consequent encroachment of that very first fair value gap. Right. Look at this right here. That's a beautiful trade already. Right. Who wouldn't take over 30 points on the NQ? And it's still going. Right. The trade's still going. Right. And where did it go? Now, when we first came on here, price was nowhere near that fair value gap, right? Price was nowhere near that fair value gap when we came on here, right? But look where price went. That first fair value gap before we displaced, came down, went right back to consequent encroachment of that first fair value gap. Now it came all the way back down to the BISI right there, right? Hasn't taken out a low. But guess what? Who won't take? I just go to the BISI, 47 points on the NQ. If you go to the BISI, right? And if you hold to the low, say you're lucky enough to hold to the low and it goes to the low, 78 points on the NQ. Who won't take that? I'm not going to be holding that long because, you know what I'm saying, 15, 20 points, I'm gone. You know? All right, man. That's all I wanted to share. Do anybody got any questions for me?
Hey, I ain't got no question, Tim, but you know what? I think you spoke on this first value gap before. You probably mentioned it to us. I don't know if you mentioned the first fair value gap.
Yeah, the first. Yeah. Yeah. Yeah, the first. Yeah, the first fair value gap, the first. I be doing like Michael be doing. I be like putting stuff out there, and then as I get better, some stuff as I get better, I learn how to add to it, and some stuff, you know what I'm saying, it's like I be like, okay, you know what I'm saying, how much are they gonna pick up on? Because it's like I want you to be able to fish for yourself. I don't want you to always come over here to my food truck and get a fish sandwich. I want you to be able to fish for yourself. I want you to take the concepts and be like, okay, when we saw this, it did this, so let me apply it to this right here. Just like how, you know what I'm saying, I was saying, okay, Michael uses the FIB to measure between new week opening gaps to get event horizon. I'm gonna do the same thing with regular fair value gaps. I'm gonna do the same. I'm gonna just do. And then he came out later and was like, event horizon is in between any two PD arrays, not just new week opening gaps. You know what I'm saying? But I had already figured that out. But so it's the same thing that I be wanting y'all to do, all right? Because I said it before, like when Michael started talking about this first PD array, I started looking at everything about the first of the session, the first of the month, the first of the week, the first of the displacement, the first of I start looking at every kind of first you can think of, right? And then the extra sprinkling of sauce that I just recently got privy to by going back through looking at old videos was and I'm just gonna call it these inversions on the opposite angles. I ain't gonna call it reclaim, because a reclaimed fair value gap is something totally different. But I'm looking at it as in the same aspect of a reclaimed order block, like being on the opposite side, coming back and reclaiming the fair value gaps, right? And you're anticipating it to be going down, because just like with market maker models, right? He put that out there a long time ago. When you get on the other side of the curve, you're looking for price to reclaim these fair value, these order blocks. So as you're going up, right, any bearish order block that's over here at these stages of accumulation, when you get on the other side, once you get below it, you're looking for price to reclaim that order block, reclaim that order block, reclaim that order block. So it's the same concept. You're looking over here at the, in the imbalances, and you're anticipating price to pass them and then come back and use them, right? That's the true nature of the inversion fair value gap, right? It ain't just, okay, we've traded past it, now it's inversion fair value gap. No, it needs to fit to the narrative of why was it created, when was it created, and how will it be used? You know what I'm saying? Why was it created? When was it created? And how will it be used? And the algorithm is like scary accurate, right? Scary accurate. It's not a joke, right? Yeah, see, I'm highlighting here, all right? So we had a fair value gap there, right? We wicked up above it, right? Let's go. Let me see what's inside here. Let's see what's inside here on a lower time frame. Take some of this stuff off so that you can get lost. Let's go down to a 15-second chart. 15-second chart right there. Okay. Came up. Relative equal highs right there. On a 15-second chart. Wick up above those relative equal highs. And on that 1 minute chart, we're wicking above this fair value gap, right? We're coming up there, taking out them. We set relative equal highs here, right? With those 2 1 minute candles, right? Wicked up there, bodies respecting the fair value gap, right? And then on the 15-second chart, right? When we wicked up there, we traded back up again, took out the high, and then came down. But the bodies each time respecting that fair value gap right there, right? Once we got on that side of the curve, traded back up to it, sold off of it, right? Wicks do the damage. What damage did it do? Went up there and took out some buy side on a lower time frame. But it's just one of them things where when you understand the little small nuances, right? When you understand the small nuances about what price is doing, right? It gives you an opportunity to look for alternate entries. Helps you with trade management, right? Helps you with trade management. Okay. When we came back up, this is when we came back up. Came into a SIBI right there, right? Came back up into a SIBI, down closed. Bearish fair value gap. Came into a SIBI right there, right? We're below these fair value gaps after coming up into that SIBI there, right? Traded back up into bullish fair value gap, respecting consequent encroachment, right? Once we came back down after trading to that fair value gap there, traded back up into bullish fair value gap. Now, all of this is happening while we're right here on price together, and you're seeing it live in action right there. So you know Tim ain't swelling, even though I know y'all know I only give it to you like what I do. But you, as you see there, right, the fair value gaps on this side of the curve, because we've had our market structure shift here. So we're just looking for reasons to sell. We're trying to sell off of SIBIs, right? We're trying to sell off of SIBIs. But so if you sell off this little SIBI here, right? If you sell off that little SIBI there, if you sell off that little SIBI there, right? If you sell off this SIBI here, right? Now you know I'm selling off this SIBI, but there's a fair value gap, a BISI, an inversion fair value I could trade up into, because I'm anticipating price to come up to it, right? I could trade up into that. I'm anticipating price to come up into it, right? It's just different little things you can use to, you know what I'm saying, trade management, alternate entries. And then when you get into times when, you know what I'm saying, it's like high resistance, or if you don't like sitting in trades, like I don't like sitting in trades, you'd be like, okay, I'm gonna get short up here on this SIBI, but I'm gonna just take it to that low, or I'm gonna take it to this fair value gap, right? Because I anticipate price doing something at that fair value gap. What can it do at that fair value gap? It can hit it and it may trade back up to a fair value gap, because it's gonna come to some point to send it back up. I'm not looking for a reversal, but I'm looking for it to come back here to do something. Why? Because we're in a sell program and we've had our market structure shift. So I'm looking for all the reasons I can sell, right? I can only sell off of what's in price. Okay. What if there's no SIBI there? All right. Is there a inversion fair value gap that I can sell off of? What if there's no inversion fair value gap? Is there a SIBI I can sell off of? What if there's no SIBI there or no inversion fair value gap? Is there a bearish breaker that I can sell off of? Right. What is price offering me in confluence with the order flow at this time? Right. In confluence with the order flow at this time. Right. And now that I've explained what I did and you all see it play out in real time, do you believe in magic? In the price action? Do y'all believe in magic now? who after listening to what I said I did and what I used to trade right here, and then see it play out live in front of you, who on here believe that it actually worked now? Do anybody believe it actually worked?